working for myself, when the business was doing well, I really, I learned a lot about siphoning a lot of that money off for myself and how that inhibits growth and things like that. And so a lot of entrepreneurs get into that, especially when you're smaller. Things do work and you can actually, create some cash flow that is typically more than what your salary was at where you were an employee previously. So we see a lot of that change when people start their own firms or own companies, and they start building up a lifestyle, and it starts to really build up based upon the money that they pull out of the business. And there's a limit at which the business can't support that constant growth. And if you keep growing your business, you'll find out the business takes on a life of its own, and it starts to have needs for savings, for investment in new roles. It has needs to have money in the bank for when a team member leaves or some clients leave. You got to go, hire a contractor to do some of that work. And if the owner's siphoning off a lot of that money, you'll find the business will struggle. And that is what happened to me.
Welcome everyone back to the Growing Money with Sean Trace podcast. I've got an awesome guest with me today, and would you like to tell people who you are and a little bit about what you do?
Yes. Well, Sean, thank you for having me on this awesome show. I am Jason Blumer, and so I'm an accountant, CPA, but really an entrepreneur at heart. So I took the entrepreneurship into the accounting profession, which I know super exciting, right? That sounds really exciting.
It's awesome to me.
Yeah. So, so I was in rock bands in college. Didn't know what I wanted to do. My dad was an accountant. So I said, hey, I think I better choose a major. So I picked accounting, worked for somebody for, 5 or 6 years. Couldn't do that. Went to work with my dad in his firm, and he started, almost 30 years ago. And I've been leading it now for 23 years. And do that. We work with a lot of entrepreneurs. We only work with businesses. And then about 15 years, started a couple of different businesses that failed. So have that story. And then 15 years ago, started another business. It's a community training event conference business for the accounting profession all over the world called Thrival. And people just come to be taught how to grow and scale their firm. And so that's what we do.
Really awesome. Well, it's interesting because people do have this thing like, oh, accounting. That's just, but like the reality is, one accountant came onto my podcast and I love what she said. She said, she loved accounting, and she said there was a reason for it. And I said, well, what is that? And she's like, because it's the truth. It's like, what's actually happening? You can talk the talk. You can there was one guy I saw on LinkedIn, and LinkedIn can be really nice, but people can also be absolutely brutal. And so this guy was on there going, you know what? I'm on LinkedIn and I'm crushing it. This is why you need to have your own businesses. And so he listed out his numbers. He's like, this is my business and this is what I'm pulling in on it. This is my other business and this is what I'm pulling in on it. And so he listed all his numbers out there to make it look really impressive. And then the accountants showed up in the comments, and they were brutal. They were brutal. And they were just like, all right, your profit margins here, not looking good, and they were just like, because he was kind of going in like, this is my flex, and everyone's like, granted, everyone's loving you for trying, but the reality at the end of the day he was trying to make it look like he was crushing it, but the reality at the end of the day was that he was not. He was getting by, and there's nothing wrong with getting by. There's nothing wrong with not crushing it. But the reality, if you're trying to make people feel like they also need to follow what you're doing, you might want to see there about, and so that's where she was like, accounting tells the truth. You can't lie with it.
Yeah. Well, that's one thing we tell. I mean, that's interesting. There's a lot to that. One thing we tell our community, and there are a bunch of firm owners trying to grow. And, if you've ever done anything in life, it is iterative. You're failing sometimes you're winning, and that is always true. And when you go to LinkedIn or social media, you often feel like crap as a business owner because that's just, unfortunately, that's the predominant feeling we have. And it really frustrates me. So in our community, we're like, what, if you're here, you cannot compare yourselves to each other. That is the start of the end. And even I wrote an article because on Thrival.com, I try to write long form type thought leadership articles. And I wrote one called Too Much Transparency maybe a few weeks ago. And it was about that. It was about sharing, because what we're always going to share, is the good numbers. We're always going to share, the vacation. And I was in the comments of one and I said, I've decided to never share pictures of me on my cruise, but I'm also not going to share pictures of me in my therapist's office. And there's always two different types of pictures, and we always see one of them and we don't see the other one. So I'm just going to not share any of it because I know people compare. And if they compare to me, that's a wrong comparison because we run two full-time businesses and it's hard. And so there are times where we're struggling. There are times it's hard, times team are leaving, times we're trying to make a client happy, hope they don't leave. And then there are other times it's going well. And that's life though. That's actually reality. And so anyway, that the truth part is what made me think of that. I think we need more of that. But social media lends us towards the flex. We try to flex. And that's not always helpful. It makes me feel like crap, actually, when you're flexing in front of me. Because I'm not always winning. I know that. So
there was this great, and it's all, there's often a distortion there. There was this photo I saw that these kids were recreating like lifestyle Instagrammer photos, and this kid was holding up a toilet seat and sitting like this next to the toilet seat, and it looked like someone was flying an airplane, man. And he's like looking out toward the cloud.
I saw that. I saw that.
Like, oh, hey,
like that's how fake it is, right?
Right, it is. And I mean, I've seen, and I've worked in social media. Like this has been my job for 15, 20 years, is to create these illusions, And so, and like, I'm sitting here going, but at the end of the day, like one of the reasons I started this podcast too, is because I think that, again, we need more transparency, but without the fluff, without the drama, without the, showing the day to day. There was this, and I like what you said about not also airing like the dirty laundry at the same time. There was this one guy that went on also on LinkedIn, and he also was getting dragged through the coals. He went online to talk about firing a bunch of his employees, and he did this tearful thing on LinkedIn, and everyone's like, man, just you still have your company, you're still there, just maybe don't need the tearful thing, maybe sit there and try to make it right by people, maybe, because at the end of the day, it is tough. Running a business is tough. Living life is tough. And if we can talk to people, but I love, having a group of people. What is it that saying that you are the sum of the 5 people around you? So if you're surrounding yourself by people that are in it, and sit there and say, and I wish that there was more of that. I wish there was more small business forums. I wish there was more people coming together and saying, hey, entrepreneurship forum, let's talk, man. How are you doing it? How are you setting things up? Because people get nervous.
Yeah, it is hard. And in that article, I was talking about what actually is community. And I think social media it's all good, right? It really can help us grow our businesses and get to know new people. We can use it for some form of community. But you find community, those are groups of people who really will go through the ups and downs with you.
Yes.
And, like even in the comments, you see somebody flexing and you see somebody else come in to try to unflex them, right? Right. But in a community, it's like, y'all, I'm doing great. And we can encourage that person. But our communities are private, and it's people who have paid to be there and to confidentially protect the information. They also know each other by name because they're together even online in our private, meetings, but they know each other. And then they also share, I'm struggling. A community of people share where they're not doing well. And so when they are doing well, we don't feel bad, a lot of times, because they've also shared the places that are real about their life when they're going through depression again or something like that, trying to run their business and it's not working like they want. So what they're seeing in a community is like, well, that person's real. So I don't have to unflex them in a comment when they're saying, y'all, I'm doing great this month. We can encourage them and go, that is awesome, because last month I know you were struggling and now you're not. And to see you turn around is awesome. So I think what we do and this is just my opinion, we assume people online are our community, but
Right.
I define community in more of an intimate way. It is people you know, and you can know people even if you've not met them, but it has to be in a community type setting so that you can share the hard and the good and get the encouragement and the support when it's appropriate.
I love that, man. I got another question for you because you're dropping some wisdom bombs here right now.
Okay,
Wow,
I hope.
I love this. No, I want to talk to me. When did you first start learning about money? Like when did money become a thing for you? And yeah, man,
Mm.
and talk to me about like what was like some of your first money wisdom or insights that really started like to make you go, man, this is a thing I need to think about.
Yeah. So I can share the bad things where I learned about money.
Do tell.
So okay, yeah. So it's not going to be well. That time I made $1 million, in one gig. So I don't have any of those stories. The stories I have were as an entrepreneur, working for somebody. As I've always been entrepreneurial, trying to run things on my own. And so working for somebody, found out that's probably not best for me. So working for myself, when the business was doing well, I really I learned a lot about siphoning a lot of that money off for myself and how that inhibits growth and things like that. And so a lot of entrepreneurs get into that, especially when you're smaller. Things do work and you can actually, create some cash flow that is typically more than what your salary was at where you were an employee previously. So we see a lot of that change when people start their own firms or own companies, and they start building up a lifestyle, and it starts to really build up based upon the money that they pull out of the business. And there's a limit at which the business can't support that constant growth. And if you keep growing your business, you'll find out the business takes on a life of its own, and it starts to have needs for savings, for investment in new roles. It has needs to have money in the bank for when a team member leaves or some clients leave. You got to go, hire a contractor to do some of that work. And if the owner's siphoning off a lot of that money, you'll find the business will struggle. And that is what happened to me, big time. And so a really difficult, really, really hard money lesson was when you run these businesses, you have to honor them and the needs of that business as it grows. It has to have savings. My partner, Julie, taught me this stuff 12 years ago. Actually, I was running both businesses by myself. And our community knows this story. It's a really dark story, but I went through that downturn, that depression of going, I've got to shut this down. It's not working, and it was really me having siphoned off all the money for my own personal lifestyle that was growing. Not a crazy lifestyle because I wasn't making that kind of crazy money, but whatever I wanted, a new car, a new refrigerator, the business can pay for that. And the business started suffering. It didn't have what it needed to grow to invest in roles. And so a lot of that was still on me trying to grow the business. And I just got crushed. And I said, I'm shutting this down. I hate this. I don't want to do this anymore. And Julie, my partner, said, well, she wasn't my partner at the time. She said, I'll help you turn them around. But man, I went through some hard things. I had to start cutting my pay, and talking to my wife about that. She was working there at the time, cutting her pay. That was not fun. That was very, very dark time. That was really, really, really hard. And then I decided to take a role. I'll be the CEO of these businesses, and I get a salary, and that's what I get. And the business has its needs. And those are not going to become my personal needs. Those are going to be for the business's growth. And we've been able to grow the businesses because of that change. And that was a complete mindset. And I guess that was a learning about money, Sean, is more learning about myself and, the foolish things I was doing, really.
But you made a good point there. But you know what almost every one of my guests says is that money is not about money. it's about ourselves. You know,
That's true. So true.
When you start talking about money and like the things that we're doing with money, the reality is it's about you, you know, and like how you are doing stuff and how you're approaching things, you know, because like
That's true.
we would like to say, but I mean, it's like, I mean, money's like a knife, you know, you can cook a meal, you can go and do something stupid, you know, but I mean, at the end of the day, it's just a knife, you know, and so it's interesting because if you're not, but at the same time, it's like, I remember when my daughter, I was asking her she was up in the kitchen. I was trying to teach her a little bit of how to cook, you know, and she was just like, and she was doing a good job with the knife. She was cutting some things. And I was like, all right, good job. Then she turned around and turned with that knife right towards someone. And I was just like, whoa, grab her hand, grab the knife, because she wasn't paying attention to where it was going. And it's like, we can be doing okay, but then we slip up another area, which leads to my next question. Like, why is it important to understand where your money goes each month? Why is it important to know what are you doing with your money?
Yeah. And God, I love what your guest said is accounting is truth. It really is. Even now, our businesses, for me and my partner, have grown to a point where we have our own controller and CFO in our businesses that is part of our leadership team, and she presents those financials to us monthly, just like somebody would hire our accounting firm to do for their business. And even through, I mean, my partner and I are at levels. She's the COO and I'm the CEO, so we're not fully in the depths of all the revenue generation that the leadership team produce for the clients. We're there for client care and team growth and guidance and things like that. So when she does that, we're learning even about our own business. And like when you present financial statements to somebody, it's such a beautiful statement of, this is the truth of what happened last month. And even we need it in our own business, because my partner and I don't do our own accounting, right? We have people doing that for us. And so they're even teaching us, here's what actually happened. And we go, okay, that's what we were hoping would happen. Or that didn't look the way I thought it would. So everybody needs some kind of presentation. And of course, personally, that's going to be, do your budget every week, right? Personally, something like that, and look at it and go, you overspent, obviously, in the eating out category, which is where we always overspend. You need something to tell you did that, because throughout your day to day, you don't remind yourself that, hey, you're not doing what you're supposed to do. So you need something to tell you you've done well or you've done poorly. You basically need that truth to help you adjust your behavior. And that's what we're always trying to do with entrepreneurs. We're like trying to produce financials in an advisory way so that they can change their behavior. We want them to see the numbers, then have some kind of insight and growth about their business. And then we want them to go do something different, right? Now, how are you going to behave? And so realities about money, when you're really looking at the truth, hopefully change your behavior, and you just become a better and better person over time, very iteratively over time, I hope.
Well, I love that, because again, like my wife and I I love that point, because again, my wife and I were looking at something for the team we run, right? A couple of years ago, I bought a camera, and I was trying to figure out, was this camera a good buy? Because at the end, and she was like, no, it wasn't, because of this and this and this. And I said, hang on, we were able to do these different things, and we were able to make this type of profit off of that thing. So it might not have been exactly what we wanted or thought was right, but it was a good buy. And again, that's where the numbers can make all the difference.
Yeah, for sure. And when you buy the camera and then you're using it, you're not thinking about that. You're just using the camera, right? And so that's what we do in our businesses. We're just running a business, helping the team, dealing with a client issue, onboarding a new client. We're just going through that. The money's flowing through all of those kind of relational transactions. And at the end of the month is when we go, okay, what's the summary of how all of that fit together? What did it produce? And we always learn. We go, you know what? We've got to start charging more for that thing that we did. We've done this 4 times now, and it's always shown in the numbers that it didn't produce what it should have. So either we got to stop doing it, or we got to double the price on it. And you can't know that unless somebody just sits you down and goes, here's actually what the camera did for you, right? I added it up, and it's actually more money than you thought it was. So this money is more than what you paid for the camera. So I think it's pretty good. But you don't think about that stuff. So, sometimes you have to just sit down and produce those financials, those budgets to help you understand how things are actually really going with your money.
100%. That you help business owners grow. That's one of the big things you do. What's one money habit that helps people grow their business and their personal wealth as well?
Yeah. Well, we see in entrepreneurs the same thing we saw in myself, which is stop siphoning money out of the business. So we want to make sure they're not doing that. If they're large enough, they're not, because they've passed the point where that's not sustainable at a certain size. So they've gotten to that point. But a lot of times we find, even if an entrepreneur becomes pretty sophisticated about their personal finances. They're now taking a salary, they're living off what they have. The business often doesn't do things that it should. So a lot of times we do treasury related things with them. We're like, this is when you use a line of credit. We teach them to save money. They need to have, 4 to 6 average, months of operating expenses in a savings account if they can achieve that. Sometimes that's less in an economic downturn. Sometimes they're saving too much money. And we're wondering, where are you not investing that for growth, or do you not want to grow? And so we're trying to push them to have good money habits in their business, which often has to do with savings and debt. A lot of entrepreneurs, their hopes and dreams and desires get out ahead of them, and they funnel the belief of that future they're trying to create with debt. When sometimes, if they would have sat down and gone, is the expenditure of that money actually somebody else's money? Is that going to produce enough wins to justify that was a good expenditure? And again, I've done this too. But debt can get you in a lot of trouble. And most businesses we work with are in debt. They really, because we work with entrepreneurial founders, and those people can really get themselves in trouble. And they don't have a lot of good money habits. I'm one of those. So they have to save, and they have to use debt in a very specific way. There are very smart ways to use it.
Well, that was my next question. Like, because for me, like I'm growing my media company, and this is something I'm starting to build out, and I'm putting pieces in place. And literally, you talking about siphoning off, I was like sitting there thinking, like, well, I got to be really careful, man. If I start making because you just sit there and I'm seeing people post like, my business is pulling in 200,000 a year, and then suddenly I remember someone saying, or $1 million a year, whatever it might be, and like, okay, but that's your business pulling that much money in.
Right. That's not your money.
That's not your money. Like, that's what I kept thinking. That's not your money. And like, I kept thinking about that, because I was like, man, my business is making $1 million a year. I'm making $1 million a year, 10, whatever the number is. But hang on, no, you're not. You're not making $1 million a year.
That's right. But it doesn't feel that way when it's just, and especially when my business was smaller, it was mainly just me and a couple people helping me. It does feel like that's my money. It really does. And that mindset, I took that mindset into when it was larger, and you will hit a size where it will hurt you, because the business will make a very obvious statement that that's not your money, because you will be paying people regardless of the revenue that comes in. So for example, you bring a team member on, you invested them, you're like, God, this is going to really help me grow. You have all the revenue. If you lose a couple of clients, that you're still paying that salary of that business and of that team member. And those are difficult decisions. You can't just fire everybody. Sometimes you got to pay to keep them and go get more revenue to replace what was left. And you're going to have some shortfalls, and your business is going to have to cover that. And if all of that money is always being pulled out for you, the business doesn't have what it's need to go through its own ups and downs. And there will always be ups and downs in a growing business, always, especially the bigger it gets. The bigger a business gets, the more complex it gets. And more complexity has to be offset with risk mitigation. You have to offset the risk of a higher, more complex business. And you do that typically with funding and cash savings.
Well, see, that's awesome, because I knew about, and for a person, having their own emergency fund is really important. But, thinking about that in light of a business makes a ton of sense as well. But I want to circle back to one. Go ahead. Go ahead.
No, I was just saying it's the same thing. Yeah. You have to have, we don't call them emergency funds in businesses, but we do. We want 4 to 6 months of average operating expenditures saved in a savings account. Yeah.
You talked about debt earlier, and you talk about people leveraging debt, and first of all, is it okay to go into debt, and or is it something that people should stay away from? And again, how can we avoid the bad stuff,
Yeah. That's a great question, isn't it? And I think, teachers like Dave Ramsey have a lot of great, if you've heard of him, they have a lot of great principles, but he leans towards a just principally no debt at all. And we work with entrepreneurs, and in our own business, we see sometimes that is capital you can use to grow. So debt, I don't think debt inherently is always wrong. I do think the risk and the danger of debt is very high, because it's an unending supposed pile of cash, right? So, it's like I didn't earn this $100,000 on this line of credit, but I can spend it all right now.
Yep.
So for an entrepreneur, so they basically, to them, that's $100,000 in cash to do whatever they want with, which for an entrepreneur, that can be super dangerous, because they have a lot of visions, thoughts. They're always thinking about the future. I could do this. And we have to help them know that, a fixed loan is different than a line of credit, is different than credit cards. And it just depends. So I can walk through a few of those. Like American Express cards are really valuable for entrepreneurs, and we use them in our business. And my partner wants to pay those off every month, but we try to put as many things on our Amex cards as we can. And that's because the points that company gives people who use and leverage that kind of debt, they know it's so valuable. They really do return such amazing value. And we leverage a lot of the benefits we get out of that Amex card for a lot of our work. So like we run events, and our team stay in a city where, we run those events, and our stay and our food and our hotels are typically free to us because of how we manage our Amex cards. And it takes a lot of, I could not do that. It takes a lot of intricate management from my partner, who's very detail oriented. And so that does work. But we've worked with people who have an Amex card too, and Amex can give you a pretty large line of credit. But they're ruthless about their money too. So we've seen our clients have Amex cards, and they'll run them up to the sky. Amex will cut you off and pull that loan. And that basically they could shut your business down. So there's always, you have to treat it with respect, right? And then you can get a line of credit, right? That's called revolving debt, just like credit debt. It's always there. You can use it, put it back, use it, put it back, things like that. And so we want to see our clients using a line of credit debt. This would be true, personally too. We get, line of credits on our homes and things like that. But for a business, a line of credit is meant to really float. That's a big part of that. So it means there's not really a cash shortage. It just means the payroll has to get paid 2 days before the deposits from my clients come in. That's just a 2-day timing. A line of credit can float you through that period, and it's a great float tool. But we want to teach our entrepreneurs that if you pull $50,000 from your line of credit to do the float, please put it back. So we want to see that line of credit go in and go out. And then there's fixed debt, right? It's just getting a loan for 150 grand from the bank, pay it back 15 years, or the SBA, Small Business Administration. And that's a fixed payment, right? And we want to see that as an investment. Like, you're getting 150 grand. What are you going to do with it? Like, you really got to walk me through seeing the purchase that's going to produce pretty immediate return for you. I've got to see that the investment of debt will really allow you to go buy that business, and that business is actually going to return more profit to you. Then we'll know that debt investment was very valuable, because the asset you purchased way outweighs the cost or the payment of the interest that you got to outlay for the fixed debt. But in that, I want to attach it to something, right? Okay. So the line of credit is floating back and forth just to cover a cash flow. This fixed debt, I got to go see the thing. I got to see the business, see the investment, the equipment. I got to really know that thing. And then I got to ask a lot of questions. What are you going to do with it? Is that thing going to generate revenue? Like the camera, is that camera going to generate revenue? How much? How do you know? How will you ensure that that's true? And if so, you could actually buy that on debt, not use your cash. Buy that on debt, because it's going to far outweigh and pay for the payment of the debt. So sometimes it is useful because you get to keep your own money.
That's awesome.
It's just dangerous. It can be.
Well, it's like, if I wanted to go take something from a friend and I'm running around, let's imagine I go borrow my friend's brand new Corvette or something like that. That car might be fun to drive. I might just be having a blast around town, but that ain't my car. At the end of the day, that ain't my car. And if I come back and if I'm posting videos on social media of me doing donuts in the street, he's going to come and get his car from me. He's going to be like,
that's right. Yeah.
That ain't your car. You can't do that. And, no matter what I say, that car is gone, and it's like, the danger is if you're running your business that way, someone can get pulled out from under you, or worse yet, I crash the Corvette, and then suddenly I'm on the hang for the money and I've got a lot of problems.
Yeah. Yeah. And we see that. We see a lot of entrepreneurs go, I really think this business I'm going to go buy is going to be awesome. So I'm going to go into debt to do it, which is a good move if the business will be done well. But if they didn't have counselors really to help them assess whether that business was a good purchase or not, they could get in trouble. Because if the business fails and they shut it down, the debt is still there. And we have seen businesses fail because of the debt investment. So if you use debt to make any investment, that's a type of investment you have to scrutinize even more than if you use your own cash to do it. Because if it fails, if it doesn't work, you can get in a lot of trouble, because the debt does not go away. You have to pay for it. So you have to ensure that debt really allows for an investment that far outweighs the cost of what that investment is in debt. So.
Yeah. Wow. That's powerful. Well, leads me to my next question. I got so many today, man.
Yeah.
You talk about people loving the shiny things, and then, like the stuff that's not, like, let's imagine my company starts going stronger, and I'm like sitting there going, you know what? I've got a little bit extra cash flow. I'm happy right now. I feel like I am going to go buy a whole new set of computers for my office. And So, but again, how do you balance spending money on the fun stuff versus saving for the future? How do you know which one you should be doing?
Yeah, no, that's good. I think, a lot of this, these are great questions, Sean. And I think what you said earlier is that the way we think about money really has a lot to do with our mindset and how we think about ourselves, and we do. We all love new computers, which was your example, which is they're really fun, a lot of fun. They're a lot of fun. They really are. They are. But the mindset that we've come to is we have to see them as just a utility, right? They really are only able to help us produce our work. The computer in and of itself is not valuable. As fun as they are to use, I've got to make sure, again, that expenditure is a utility that helps me produce revenue in the business. I have 2 old iMacs I've had for 7 years, and they just keep working, and you go, man, I wish they would die. Then I could buy some new ones. But
Right.
I just don't need them. But I also don't get the cool domed curved monitor either, which boy, that would be fun. But that expense doesn't do anything for me. Computer expense doesn't do anything for me. It does not increase my revenue. It doesn't help me serve our clients better or support our team better. It really only replaces a utility that is already working. And trust me, that is not a mindset I want. It's one I've had to come to understand. And my partner taught me these things. And it has protected us from the whims of my own emotion to go, we're doing good. I think I'm just going to go ahead and go get it. And it actually didn't change the revenue at all. It just increased in expense. And now if that kind of move is done on debt, that's not a good use of debt because it didn't do anything for your business. But your example was, no, use your cash. You're making some cash. Use that cash. It's not bad. It didn't level your business up in any way. You leveled up a type of utility, a piece of equipment that you use. That's all.
When I was talking to my daughter about something, we were talking about getting a new phone. And she's
Yeah.
like, we were looking at, is this a good thing or a bad thing? And I said, well, depends. It could be great if you're an influencer and you need to have great quality video. If you need to have great video wherever you're going, you need to have that, and that helps you with that. It helps you do your live streams. Yeah, that's probably a great thing to invest in.
Mm-hmm.
But if you just want it because it looks cool and you got the newest phone, then it might not be the great investment.
Right.
So it depends. I think so often things depend. Because my team having all those shiny new computers to edit videos actually helps us up our workflow.
That's right.
Depends.
Yeah. Like for me, I'm mainly a consultant, but I'm on a lot of podcasts and do a lot of webinars. So I invested in this higher grade camera.
Looks good.
Yeah. Well, I did it because I'm on so many shows. You have to have it, right?
Yeah.
You have no choice because that's what your business does. But there's a lot of people we work with, and their cameras, are those crappy iMac cameras or whatever else they're using that are still very grainy and crappy. So we up leveled just to support actually the work. And it was a good move, but we would spend cash on something like that. We wouldn't invest debt in just making our video look better. Now, that's because we don't do your work, which is the video, the social, that kind of stuff. You kind of don't have a choice. You have to have certain levels of equipment.
Yeah.
I don't know. It's a mindset, and you're right. It just always depends. And it's not black and white. When do you spend debt and when do you spend your own cash? It just depends. Depends on what you're buying, what you think it'll do, what it will do, how guaranteed you are for the value of the outcome of that thing you bought. Sometimes a client will go, I have the cash to pay for it. And we're like, this is a perfect thing to spend debt on. This is a perfect thing to not use your money for. And it just totally depends.
That's
totally
awesome information.
Yeah.
See, this is why you got to have someone like your team that can help give them advice and help people get there, Because a lot of people don't even know the right questions to ask. And this has been a common theme on this podcast.
Yeah.
People don't know the right questions to ask. Should I buy this? Maybe you're asking the wrong question. How should you buy it? Because if you're asking that, there might be a reason that you think you need it, but how you're doing it, how you're putting it together. Well, let me ask you this next one. If someone wants to start a business, even like a lemonade stand, something super simple, what's the first money lesson they should learn?
That's good. Pricing is one of the most sophisticated, most difficult things that we teach. How to price. We price professional services. That's what we sell. And there's so many ways to think about a price. A lot of people want to calculate a price. And they want the justification to go, my hourly rate is this times this many hours. That makes sense. right? This is the price. But when you study pricing, there's so much psychology to it. When you study people like Blair Enns, a good friend of ours, on pricing in his Win Without Pitching manifesto or his creative pricing book, you find really you're pricing what somebody values. And value really is nothing more than a feeling that that person has about what they want. It's just a feeling. And so essentially you're pricing different people for different things. So, a value price is something that is priced based upon what that client in front of you values. And so that means you have a lot of power to do that. And you can do things in your business to leverage and create that stronger power. So we want to niche down into large digital agencies and high-end nonprofits, which we serve in our firm. And we want to be called experts. We actually want to claim, we want to position ourselves as experts on our website. And when we do that, we believe the market can return to us a higher price. And so we ask for a higher price, which takes courage sometimes on our part to say, I want you to pay me this. And the client go, well, that's 50% more than the person I'm paying now. And we're like, yeah, that's because it's not working with them. And you said you want to level up. And this is what it costs you. This is the price it'll take to level up. So back to the lemonade stand. I would always lean, and I lean this way, I would lean towards a high price. I would want to say, my lemonade is $5 a cup. And if I'm coaching that entrepreneur, they would go, oh my God, nobody will pay that. And I'm like, let's explore how could we get somebody to pay that? What would they value enough? Maybe it's the location of your stand that actually would raise the value of a $5 cup of lemonade. Because if you charge $5 for your lemonade, you're going to make some money. That's pretty good return because the cost of lemonade is cheap. And what we have to do as entrepreneurs when we're starting businesses is stop assigning our price to the market based upon the cost of the product to us. That's a wrong way to price. And a lot of businesses do that because they want some kind of justification in their own mind that if my costs are this, I'll just add a 50% surcharge on my costs. And what that is still doing is putting a ceiling on your pricing. You're still only going to make 50% more than your cost. But as far as pricing, I want you to be able to make an exponential amount, all based upon the value of the people you're selling it to. So maybe you need to think about the ingredients, the types of lemonade, where it's located, who manages the stand. Maybe you find there's some weird market from 4 to 6 in the morning that won't lemonade. That's when you need to open. But that's an additional value, and all of these things can justify a price. So pricing is massively important. A lot of psychology to that. We teach a lot of pricing, and so that is the place you can really win if you're pricing your services appropriately. And so what we like to do is test our pricing in our market. We do this by creating new services in our firm. We try to do that once or twice a year. Something brand new, proprietary that we created and made up, and we go put a price on it and we go sell it. And sometimes we find, wow, we didn't sell that for enough. Sometimes we struggle with the person we're selling it to. They're like, I don't want to buy that. I don't see the value in it. And it teaches us, oh, maybe our market doesn't want that, or maybe it's the wrong price. So there's a lot of work to get your pricing right with your market, and it doesn't have to be a calculation. So when I set a new service, if I want to charge $5,000 for it and it takes us 30 minutes, then I'm going to try it. I don't have to calculate it. And people ask, where'd you get that number? I pulled it out of my butt, and I don't want to tell clients that, but sometimes these things are just, there's not a basis for what you're doing. It's based on the psychology of how your market feels about the value of what you're trying to convince them to purchase from you. So it's pricing, man. You can win. You can really win if you get your pricing right.
I love that, man. If you could go back in time and give yourself one piece of financial advice when you were younger, besides don't funnel off the money from your business, what other piece of advice would you give yourself?
Golly. Probably, I have really, when I've made mistakes, I've avoided the counsel of other people pretty significantly. Um, if I could go back and and I would try to find the counsel of people that could really help me to make decisions about my money better. Um, and my wife's tried to do that, and I would ignore her sometimes. My partner's done that. I would try to ignore my partner, but she's my partner. She owns the company, so she's like, "Sorry, you can't ignore me like you can your wife." Um, so I need counselors in my life to help me make the justification if something is worth spending or not. In and of myself, if I'm left to myself, I know I'll lean towards doing something just because I want it and I want to have it and I want to do it. And for me, that is not a healthy place to be in. I need another human that I trust, that really cares about me. What somebody we do a lot of coaching too, so I call that person an ESOT, ESOT, which is an empathetic person, a safe person. They're objective as I can get them to be, and they're a truth teller. And these people, they care about me. I'm safe with them. They're a little bit distanced from me in my personal situations, and they don't mind telling me the truth. If I can get that counselor in my life, I'm going to really get some good advice, I think, on what I should and should not do with money and help form my thinking. I just don't, for me personally, I don't want to trust myself to form my own thoughts about money. So I have good people in my life to help me do that.